This is Craig Haugard with your Financial Issues Ag Update. Well, the corn market traded into positive territory on Friday as we saw a round of short covering ahead of the weekend. Now, you look at it for the entire week, we had the March contract trade in a 9-cent trading range, a fairly narrow trading range, mainly because fresh news was almost non-existent and optimism of the Phase 1 trade agreement purchases kind of swayed back and forth last week. Non-threatening weather in South America also put some pressure on prices, although the talk is currently that the forecast for rains in Brazil could slow the soybean harvest, and that could consequently delay the planting of their second crop corn. As I record this, however, the bears seem to be fully in charge of the overnight market. We have the spot futures trading 2 cents lower as I record this. Soybean prices turned higher in a round of technical buying and short covering on Friday. The beans kind of appear like they're stuck in a 10 to 20 cent trading range as traders are torn between thoughts of record harvest in Brazil and dreams of what the Chinese business could mean to the market. Speaking of Brazil, yield reports so far suggest another record crop is in the making, with the most current estimate I've seen coming out of that country projecting 126 million metric tons of production. As a way of contrasting that, the last USDA estimate was at 123 million. In the overnight trade, we have spot soybean futures trading 3 cents higher. Wheat also was higher Friday in a round of short covering ahead of the weekend. In general, demand has been slow and optimism seems to be waning over possible Chinese demand for U.S. wheat, both spring wheat and winter wheat, and the winter wheat crop has been getting some beneficial moisture. Domestic mills appear to have most of their needs pretty much met for the time being. On the positive side, the trade is expecting a slight reduction in both U.S. and world ending stocks. If you look at it from an overseas perspective, Russia may be curbing their wheat exports because of the spread of the coronavirus in China. Well, in the EU, wheat prices rose on weakness in the euro versus the U.S. dollar, as well as improving demand on the continent. In the overnight trade, Chicago is 3 cents lower, Kansas City is down at 2, and Minneapolis is trading a penny lower as I record this. Cotton futures remain range-bound. Friday's session finished with the March futures closing 16 points lower as they settle at 67.75. In the overnight trade, we have spot futures trading an additional 9 points lower. Livestock futures had a split session. Live cattle futures were marginally better, with the April contract finishing the day 5 points stronger. March feeder cattle, on the other hand, were 70 points lower. Lean hog futures turned in a positive performance, the April futures closing up $1.37.5. Friday's action filled the first gap on the chart and leaves 2 gaps on that April chart yet to be filled. So I would hopefully see a continued rally in that lean hog futures market. Class 3 milk futures finished the week on a stronger note, with the March futures closing 19 points higher as they settle at 17.42. And cash livestock markets, on the other hand, finished the week on a weaker note. At the close, we had choice beef boxes 81 cents lower as they closed at $210.12, while selects were down $2.07, settling at $203.89. Pork carcass values were 54 cents lower as they finished off the week at $64.81 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.